Hi everyone, this is Mike Kramer of Mock Capital. Today is Tuesday, December 3rd, and it's around 4:15 New York time. So we're going to be getting a lot of data here in the U.S., and it's going to be picking up in pace between now and Friday. Tomorrow we're going to get ADP employment changes, looking for 150,000 jobs to have been created in November, down from 233. ISM Services Index, we're looking for a slight downtick, 55.7 from 56. Prices paid, 57 from 58.1. And employment's expected to stay flat at 53. Then, of course, on Thursday, we'll be getting initial jobless claims. We're looking for 215,000. Continuing claims have been inching higher over the last couple of weeks, so we're going to be watching this number closely. And then, of course, on Friday, we'll be getting the big job report. We're looking for 218,000 jobs to have been created in the month, up from 12,000 last month. Unemployment rate expected to remain unchanged at 4.1%. Average hourly earnings ticking down to 0.3 from 0.4. Year over year, we're looking for 3.9 from 4.0. So lots of data here in the U.S. It's going to all be market moving data. One thing that I will point out to you is this University of Michigan 5 to 10 year inflation outlook. This will also be coming Friday morning. What's important here is that last month it was at 3.2%. Why is this an important number? Well, it's an important number because if you go back and you look over the course of time, 3.2% is a number we haven't really gotten above very often since the early 1990s. So a move above 3.2% for whatever reason would certainly be eye-catching, at least from my viewpoint, and would certainly maybe result in perhaps interest rates here in the U.S. moving higher and potentially some further strengthening of the dollar. So this is one thing that I would just keep a loose eye on and just pay attention to as we get closer to that release on Friday morning. Expectations are for it to tick down to 3.1%. So just something to keep your eye out for. Another thing to keep your eye out for will come in Japan, and that's going to be on the 5th. And basically, we're looking for labor cash earnings. This is just an important number. I think just because you have a BOJ meeting coming up in December, Ueda's recently made mention of potentially keeping track of wage growth. He mentioned spring wage negotiations, but you got to think that any sort of wage type numbers are going to be something that might be in focus and something to just keep an eye on, considering people are starting to get a little bit nervous about a potential BOJ rate hike come the December meeting. And that's certainly when we start off. You can see the yen has been strengthening materially versus the dollar once again. Right now, we're at an important support level around 149.5. With potential setup here that we could move back into the 146.80 area, maybe even lower than that, at least when you look at USD JPY. You're seeing really the same thing in the euro. The euro's actually moved all the way back down to the near September and August lows. But when you look at the euro yen, at least, it's getting a little bit oversold here. So we might want to look for some support in this area, euro yen, in this, call it 157 region. RSI below 30, below the lower Bollinger Band. Doesn't mean that the decline is done and that the yen won't continue to strengthen versus the euro. It just means that there might be a little bit of a period of consolidation ahead for it. And it's the same thing when you look at Aussie dollar, Japanese yen. We've seen not quite the same level of extent to being oversold, but again, kind of getting into that range where maybe we're going to see some consolidation. But ultimately, I think you're going to continue to see yen strengthening and moving towards this 94.30 region. When we move over to euro dollar, clearly been weakening again. We talked about this last week, getting above the 10-day exponential moving average. We did do that, but we didn't hold it, and now we're back below it. And so you can see there's plenty of room for us to move lower here. I guess the bigger question is are we trying to form some sort of bottom or not? And that's not really conclusive yet. At least when we look at the RSI, you can start making a case for maybe a change in trend occurring, although it might be a little bit too early to do that. You can clearly see here RSI has kind of bounced off this 30 region 2 times. Notice the RSI here was around 30, and we had a euro up here at 107. Here now we're again seeing this RSI around 26, around 104 on the euro. So you're making lower lows still, which doesn't really give us what we want to see. So I would say as long as we continue to hover around the 10-day exponential moving average, we're still looking for lower euro and a break below 104.5. does open the door potentially to around 102. You're going to need strong U.S. data between now and the end of the week, or you're going to need the French government to basically dissolve and go through that process of selecting a new prime minister. That could also add to the weight on the euro. When we look at the pound, it's a very similar sort of look. We're just continuing to see it hover around the 10-day exponential moving average. Clearly resistance up around 127.60. Again, at least on the pound, you can clearly see that there's downward momentum. Perhaps the pound is trying to change that trend, but we really haven't seen enough evidence to support that. Clearly, if we break above 127.60, then there's room to run back to around 130. But as long as we stay below 127.60 and we hover around this 10-day, I think you got to look for weaker pound, potentially a break below 125, sets up a drop to around 123. When we look at gold, that's been kind of just stuck in the mud more recently. Again, just consolidating here around the 10-day exponential moving average. Also around the 20-day moving average. It's sort of in no man's land when it comes to being overbought or oversold, so it's certainly free to move in any direction which it chooses. Right now, we have a clear level of resistance around 2,700 and a clear level of support around 2,500. Stronger dollar, higher rates probably going to result in gold moving lower. Weaker dollar, lower rates going to result in gold moving higher. So I would just continue to watch those things. Oil's another one that we can take a look at. Oil's been sort of just in this downtrend sideways motion. It almost looks like a descending triangle has been forming. You clearly don't really have momentum turning higher quite yet. It's just kind of trending sideways. A break out above 71, I would say, probably sets up a move into the mid 70s. But if you're unable to get above 71, I still think that there's a risk here of a retest of 66.5. That's obviously been a major level of support. And until that level is broken, you have to assume it's going to continue to hold, because every other time we've gotten to 66.5, at least going back to around 2021, that's been the level that's held. So a break of 66.5 certainly sets up a bigger move down to around 58. But as long as you stay above 66.5, I guess you have to favor upside and potential move back into the mid 70s. The DAX just today, I mean, it looked like the DAX was getting close to breaking down. And then within 1 or 2 days, they were able to take it up to a new all-time high. Earnings estimates continue to deteriorate. I keep reading about how horrible the Eurozone is doing. But the DAX, which is, basically Siemens has been really moving again. And that's part of the reason why you've been seeing the DAX kind of get back to life. And right now you can see the DAX is trading outside the upper Bollinger Band already. So I would probably think that you're going to see the DAX maybe pull back down, or at the very least trade sideways for a couple of days until we consolidate a little bit, because that tends to be what happens when you get outside the upper Bollinger Band. At least it did here and here. So just be mindful of this. It looks like we're a little bit overextended. FTSE also has had a pretty decent move up, also getting a little bit extended here. This 8,400 region has been a tough level of resistance for a couple of weeks. I mean, if you're assuming, if we're playing ping pong, right, the assumption would be is that the next move is back down to around 8,200, because that's what's been happening. But again, clearly a break above 83.50 sets up a move to around 84.50. And that's pretty much where this is at this point. The NASDAQ today, it looks like it got 21,160. It looks like resistance is somewhere around 21,350. If that's going to play out. Otherwise, we're kind of looking at a potential double top pattern, 2B top pattern forming. The rising wedge is obviously in question at this point. It certainly doesn't look much like a rising wedge at this point, but when you flip over to the S&P, you can still clearly make a case for a rising wedge pattern. In fact, we've just been rising above this trend line now for some time. Resistance appears to be around 6,100, and that's sort of where I would think the upper end of the range is at this point. And when we finish it up with the Dow, here you can see the trend line we've been respecting. Basically what this kind of shows is that, upside is probably somewhere to this upper Bollinger Band around 45,300, 45,200, somewhere in that level, while I think the 10-day exponential moving average continues to serve as a support level, which it's been doing now for quite some time. Anyway, that's all for today. Until next time, have a good week. Bye.